Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 1st of February 2021, and we're reporting that silver rose from $27 to $30 in just a few hours this morning GMT time or overnight EST time. On the back of our video yesterday entitled $1,000 Silver This Week, we investigate what has happened and will it continue. So let's take a look. Now, yesterday's video is a very important one, and quite frankly has been one of our more popular videos in recent times. The reason being, A, it's topical, B, it's about silver, and C, it suggests that silver really could fly to the moon. But we pointed out that towards the end of the previous week, and especially last Friday, we saw silver rise from as low as $24.76 to as high as $27.66 and closed on Friday at $27.05, still up some 6% for the week. We highlighted that the GameStop shares were boosted by activities carried out by large Reddit groups utilizing, amongst others, the Robin Hood app to short squeeze the stock or the share price through options primarily, but not totally, resulting in that share price of GameStop rising from $68 to $469 in just a few days. We also reported that the same Reddit following were now going to target silver, at which point some commentators talked about the prospect of silver potentially rising to as high as $1,000 an ounce as a result of it. Now, whilst we personally felt that was unlikely, simply because the size of the silver market is such it would take more than a few hundred Reddit followers, investors, to raise the price sufficiently, especially bearing in mind the size of the silver market compared to the size of GameStop's capitalization, which is clearly, the former is clearly considerably larger. We did forecast on our weekly update on Saturday an outlier price of silver of, at the downside, $24 and at the upside $30. But we did add this following caveat. However, if there is a continuance of what we saw on Friday, then $30 could certainly be breached, and easily, and commented upon silver potentially even hitting $40 or $50 again in the not too distant future. We also pointed out yesterday that a number of bullion dealers were either delaying sales or closed for sales over the weekend, and a number of them admitting that they were either out of stock or short of stock, at least up to 100-ounce bars, and stock below that, what we would generally consider as traditional retail stock. Though our investigations discovered that 1,000-ounce bars still, at least for now, are in readily available supply. And we quoted some of the suppliers who put these warning signs, such as Atmex, Gem Bullion, Provident Metals, ST Bullion, and in the UK Bullion by Post, but there were many more. We were just citing a few examples. Now, overnight EST time, or early morning GMT time, up to the time we're writing this, which is 11 o'clock GMT, 11 in the morning, we've seen silver prices jump over $3, from $27.05 to $30.10. And it's fallen back slightly, and it's currently maneuvering around the $29.35 level. Now, it is, frankly, too early to tell where the price could go from here. But to put it into perspective, and we have to bear this in mind, the price of gold is up $13 at $18.60. We're now in a situation where the gold to silver ratio has fallen dramatically, already from its recent low level on Friday of 68 to 1 to just 63 to 1. And it actually touched 62 to 1 when silver was at its peak earlier. Now, as I mentioned, it's too early to tell the next move, though, of course, we're still expecting quite bullish tendencies. And we have to accept that at $30.10, silver has been at its highest level for 8 years. Now, equity markets generally are higher, both overnight in the Asia-Pacific regions, up between 1% and 2%, and this morning in the United Kingdom and Europe, broadly up by 1%. But we want to draw your attention to two very brief reports. The first, published by Reuters, stressing a degree of caution. This is what they have to say, quote, "While the stock market tussle continued to grab the headlines, analysts cautioned the bigger concern was economic momentum in the United States and Europe as coronavirus lockdowns bite. Indeed, 2 surveys from China showed factory activity slowed in January as restrictions took a toll in some regions. In the Eurozone, manufacturing growth remained resilient at the start of the year, but the pace waned from December. Data from Britain will be in focus later in the European session. While the coronavirus vaccine rollout globally remains slow, with concern about whether they will work on new COVID strains, Europe was also bolstered by news that it would receive a further 9 million doses from AstraZeneca in the first quarter. It is these considerations, not what is happening to a video game retailer day to day, that has weighed on risk assets, said John Briggs, Global Head of Strategy at NatWest Markets. So much of the market's valuations, risk in particular, is premised on the fact we can see a light at the end of the COVID tunnel. Higher yields combined with a more cautious market move have seen the safe haven dollar steady above its recent lows. The dollar index stood at 90.72, having bounced from a trough of 89.20 hit early in January. Unquote. Now, also, just a few hours ago, so it's more updated than what Reuters have printed, Bloomberg quoted the following. Quote, "Silver broke above $30 an ounce as the precious metal took center stage in the retail investor frenzy sweeping through markets, fueling a debate over the power of Reddit-inspired speculators to take on ever bigger targets. Most active futures jumped as much as 13% to $30.35 an ounce on the COMEX, after a weekend buying binge that overwhelmed online sellers of silver coins and bars from the United States to Australia. BlackRock Inc.'s iShares Silver Trust, the largest exchange-traded product tracking the metal, recorded an unprecedented $944 million net inflow on Friday. Like the buying stampede in GameStop Corp. and other small-cap stocks that has captivated the financial world in recent weeks, silver's advance can be traced to Reddit's Wall Street Bets forum. One post last week declared the metal the biggest short in the world and encouraged traders to pile into the iShares Trust as a way to stick it to big banks. Yet silver differs in important ways from stocks like GameStop. For one, the scope for a short squeeze in silver is far less obvious. Money managers have had a net long position on the metal since 2019. Futures and options data from the Commodity Futures Trading Commission show. The market for silver is also, by some measures, much deeper than those for smaller stocks like GameStop. The bricks-and-mortar video game retailer had a market capitalization of about $1.4 billion in mid-January, before the Reddit frenzy sent the company's value soaring more than 16-fold. By contrast, the value of silver sitting in vaults in London is alone worth about $48 billion. What's more, it's unclear how long retail investors will stick to the silver trade. Already, some prominent members of the Wall Street Bets forum have advised against it, with some noting that Ken Griffin's Citadel Advisors LLC, a favourite bogeyman of the Reddit crowd, is listed as one of the biggest shareholders of the iShares Silver Trust. Whether or not the rally fizzles, it could have ramifications beyond what has typically been a relatively niche corner of the commodities world. as the first high-profile target of the retail frenzy to start trading on Monday, silver may help set the tone this week for managers trying to gauge how Reddit-fueled volatility will impact their risk models and potentially cascade from one asset to the next. Last week's events have shown it to be unwise to doubt the purchasing power of retail investors, and this has been sufficiently demonstrated again on the silver market, said Howie Lee, an economist at Overseas Chinese Banking Corp. They may find it a bit harder to squeeze the silver market than they did with GameStop. The former is much bigger and more liquid, but the momentum looks like it rests with them at the moment. Futures were trading 11% higher on the COMEX as of 8:19 a.m. in London, after rising more than 5% last week. The buying frenzy also fed into mining shares. China's Silver Group Limited rose as much as 45% in Hong Kong, while Australia's Silver Mines Limited gained as much as 49%. Unquote, end of that article. Thereby showing how silver mining and silver-related shares have also been positively affected by what has been happening, and some insiders claim that some of these stocks too may be individually targeted by this Reddit group of investors. So we have some exciting times. All we caution is not to get too carried away, because once the Reddit group moves on from silver, and none of us frankly know exactly when that will be, then we envisage prices to fall back again quite sharply and quickly. So do not get too caught out if that does happen. Meanwhile, enjoy the upward ride. What do you think? Are we going to see silver move much higher from current levels? Or has it done all that it's going to do? Will Reddit move on relatively quickly, having realized that it cannot achieve the same sort of move with silver as it did with GameCorp? Do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign so you're notified of our videos as and when they are published. And finally, please look at the video we produced yesterday. It's gained some momentum, and we think it contains at least a background into what these Reddit investors, speculators, are up to. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.